3, 2, 1.
Hey everyone, welcome to the Token Warrant. I'm Mike Zajko.
I'm Regan, Bozman.
And today we've got a very special edition of the Token Warrant. We're actually live here in Brussels for ETHCC, and we've got two very special guests, Joey from Founders Fund and Matt from Caldera. And they're going to be talking about the recent Series A that Founders Fund led into Caldera. So let's jump right into it.
Awesome. Yeah, I'm Matt, co-founder, CEO of Caldera. We are a modular blockchain platform. We try to be the entry point for all sorts of projects that are interested in building on the modular stack. In practice, we're in this category that's known as RaaS, Rollups as a Service. So we work with teams when they decide they want to launch an L2 or an L3. We help them get that spun up on the infrastructure side and kind of work with them from, build to launch to post going live.
Awesome. Thanks for having us. And I'm one of the partners at Founders Fund. Before that, I was co-CIO at Pantera Capital. And before that, I was writing smart contracts and building Augur.
Well, it's good to have you both. I mean, I feel like I jumped right into the introductions, but just to set the stage, you all can't see us. Normally these are recorded and we have a video, but we're doing this special live. We've got this kind of funky futuristic booth that we're sitting in. And this is the first time we're going to do an attempt of recording this where, normally I'm in Washington, Regan's in San Francisco, and our guests are dialing in from all over. So if there's any technical issues with this, bear with us. But before talking crypto just yet, first trip to Brussels, what do you guys think? Better than Paris? Worse?
Well, I mean, the first day I got here, I had some good French fries and some Belgian waffle. That was pretty good. Yeah, Paris is nice too, but I think this is fun.
Yeah, it feels similar to me. What I love about European cities is it's so bikeable. I like to travel around on the e-bike, so did that in Paris, did that here. It's been good.
Yeah, I've been racking up the scooter miles here. It's a lot of fun. It's a great way to get around a city and kind of like see it as you go.
Yeah, I think what is the famous thing here is the little angel that's angel pissing fountain. Is that the
mannequin pee?
The main attraction people come here for is that chocolate, waffles, and French fries, or not Belgian fries.
Belgian fries
with mayonnaise. Mayonnaise is what you dip them in here. I think. Joey, is that what you did?
No, I got curry ketchup.
Ooh, sounds good. All right. Well, we've detoured to talking about tourism, but back to crypto. So Matt, maybe this rollups as a service space and the modular space is really blown up. So maybe just talk a little bit more about the origin story, how you got started, what you maybe were up to before starting Caldera and the team and how it came together.
Yeah, for sure. So I've been in crypto on and off since I was in middle school, which was around 2010, 2011.
I'm feeling very old right now.
So kind of pre Mt. Gox explosion era. And so at the time, people were actually doing what we're doing right now, which is launching your own chain, right? That's how Litecoin got started, Dogecoin got started. So it was the meta for a while. You launch a shitcoin, you fork Bitcoin. And so as a kid, I was actually doing some of that sort of stuff, nothing for anything, any project of note, but just as a contractor, right? Doing software development. And then kind of from that, got into various other, sorts of software development throughout high school. That took me to Stanford, where I ended up going really deep in crypto with a bunch of folks, actually from MIT, that were very big into the on-chain gaming ecosystem and a little bit of on-chain social. Just folks who are building real applications on top of blockchains that required a lot of compute resources. This was late 2020 to 2021. At the time as well, modularism was just starting to take off. So there are some Celestia posts, right? White papers, some posts on ETH research, et cetera. We saw that where we got very inspired, my co-founder and I, to build kind of tooling for that ecosystem. And then, the thing that's immediately downstream of all the open source rollup development that was happening, and also the new DA layers that were coming out, Celestia, and I think Eigen was starting to come around at around that time, was to build infrastructure for that. In early 2022, we dropped out of college. We validated that idea a little bit. It was kind of fake validation, I would say, right? We spoke with a couple of fully on-chain gaming teams. They seemed interested. We thought that was enough to really kind of go in, and we were kind of looking to explore this space, and we knew it would take a little bit of time for things to come to fruition. So in early 2022, we left college, raised a small pre-seed, and then got started with Caldera. First year or so was very, very slow. A lot of just validation, speaking with teams, a little bit of development, and then things really kicked off with all the rollups being launched in mid 2023, and it's just been a roller coaster since then.
Yeah, it has been a pretty wild year for the modular space. What do you think has been the biggest shift in the past year? Because there was so much hype coming into the Celestia launch. mean, have you noticed any changes in sentiment, or has it only accelerated? What's been most significant for you guys?
The thing that really opened the floodgates was like the early adopters to this like modular thesis. They found like quite a bit of success. One of our first customers, and still like one of the largest chains that we're working on, is Manta, in terms of TVL. And like they were very, very early to this thesis of using Alt-DA to improve the user experience, lower fees, et cetera. And that allowed them to gain a really strong competitive positioning in the L2 space. I think they're still like the 5th or 6th largest L2 in terms of, value locked. People saw that. There are a lot of application specific chains as well that launched around the same time. And I think that really opened up the floodgates. It's always, harder to get like the first users and the early adopters. And so once that happened, the space really exploded. Now coming into 2024, there's been a bit of a bifurcation between like price action and what we're seeing on the developer and founder side. Our CRM is still really strong. It's like up and to the right. In terms of new chains that are launching or new deals that we're closing, it's only increased over time, despite the fact that like Celestia price has gone down and people are kind of questioning, whether the modular thesis still has legs. And so we're still like very bullish about the space. And we think like, if anything, activity is going to continue to accelerate, but it's definitely now backed out of being like absolutely center stage. And so we think there'll be like a second resurgence of the modular thesis fairly soon.
Awesome. And we definitely want to keep talking about the modular thesis, and especially Joey, like you're in the fund's view on it, but maybe taking a step back, would love to understand the fundraising history and kind of like use that as a segue into how you two met. I'm imagining you like dropping out of Stanford, leaving your dorm room with like a cardboard box, like how, something like out of the social network, like how did kind of like that initial round come together?
That was a very interesting time. So this was 2022 winter quarter in college, right? Which is January to March is when the quarter we took off. At that time, that was like peak bull, both in tech and in crypto, right? It was like, we raised about a month before Terra Luna happened.
That was great, great timing.
Yeah, we've always gotten very lucky with timing. We were very lucky, like being at Stanford and just kind of having good reputations as engineers meant the round came together pretty quickly. I remember we had a bit of like naivety then. We pitched Sequoia and we pitched Andreessen, and we were like, well, if neither of them decide to fund us, it's probably not worth doing. We got lucky that we kind of fell into it. But I had pre-existing relationships with Sequoia. They ended up doing that first round, which was a pre-seed. Then about a year later, we did like our seed round in earnest. The focus there was entirely crypto native funds. So led by Dragonfly, participation from like 1KX, Ethereum, Alliance DAO, et cetera. And we got very lucky then as well. We closed, in early 2023, but we signed our term sheet like a day before FTX happened.
You really have like the magic touch when it comes to timing these rounds.
Yeah, it's entirely luck.
Although hopefully it's not a foreshadowing event that something terrible is about to happen.
That's a great point.
Awesome. Well, that brings us to that. Like, yeah, Joey, would love to hear your perspective, like how you two met, kind of how you guys formed an initial view on the space, and we can go from there.
In terms of the modular space, it's something I sort of noticed that was, kind of picking up in traction, really over the last year or two. At first, I wanted to see, what's actually real here. But then it sort of kind of, as I read more and more about more and more projects, it started to make more and more sense. Basically, if you look at kind of the way the web went in the early days, everything was very monolithic. If you go way back, tech startups would actually buy a bunch of hardware. They'd spin up their own servers. Then you had AWS. And then now there's a million microservices that plug into AWS. And so I think, it sort of makes natural sense that would happen in crypto. That's also basically, the Ethereum roadmap is very aligned towards that, starting with, kind of this whole thing around rollups, and, Ethereum basically abandoning kind of the old school sharding proposals. And so you were very interested in the space. And then we started to think about, what parts of the stack will actually have, meaningful value. In general, and there's some exceptions to this, but in general, I think you want to be at the very bottom of the stack. So like in AI, you want to be NVIDIA, or you want to be at the very top of the stack, be ChatGPT and OpenAI. And if you look at the modular space, in my view, kind of the very top of the stack is sort of the Rollup as a service providers. And we'll get into this later. I don't think that's all that Caldera is going to be, but it's a good spot, and it's a good way to acquire customers, and it's a good position to be in because you have the customer relationship. So we looked at kind of all the companies in the space. There were, a bunch last summer that we looked at, ended up both, talking to all the teams, but also talking to people like, Steven at Arbitrum and trying to see kind of what did they think the best teams were in the space. And after a while, we sort of realized that Caldera was, clearly the best team in the space, in our opinion. And so we basically passed on all the other companies that were in the sector, There wasn't any like Caldera round on the table or even an option at that point. But one of the things for Founders Fund is we really like to invest in players that we think can be the dominant player, and so we'd rather just pass on something than invest in like the third best player or something like that. And so that's sort of how we initially met. And so we ended up, I think, like going to their office, hanging out a bit there, talking a bit about like kind of the market and go to market and product differentiation versus competitors and stuff. And it was mostly just as like sort of a friendly thing where maybe there's a chance that there will be some round in the future, but at that point in time, it was just early conversations.
It's an interesting point there about kind of like how you guys formed a thesis on the category. I feel like some venture funds kind of like invest opportunistically, right? They see founders, like deals come across their desk and they're like, okay, like we like this team, we like this market. There's others where it's kind of like, all right, this is a category. We think there's going to be, some really like meaningful returns coming from here. We're going to form a thesis. We're going to spend a lot of time on the market, and then we're going to try to meet every team in the space. It sounds like maybe Founders Fund is more the latter. Like, would love to just kind of understand a bit more about like how thesis formation happens there, how you guys evaluate markets, and then ultimately like how you make investment decisions.
It's sort of 50-50 for investments we make, whether they're, kind of, inbound or us doing a bunch of research and going outbound. For us, I'd say we definitely have like, various theses and views on the space. And, a lot of that's just informed by, one, we use a lot of crypto stuff personally. So that's one piece. The other part is like, we have other, companies and protocols building projects in our portfolio. So we see what challenges they face, which sort of helps, inform our view on what are the best solutions to those problems. And then I would say, in terms of how we came about our thesis here, it's clear that this modular thing is happening. Even if it's happening, it doesn't necessarily mean we want to make a bet, because for us, we're very founder driven. That's kind of the number one thing at Founders Fund. And so there are plenty of spaces where we have a thesis and we look at it, we talk to all the teams, and we're like, actually, like we don't really want to make a bet here on any of these teams. And sometimes you wait and a year later, a great team comes up and you make the bet. Other times you just never back a company in that space because there wasn't a team that really kind of met the bar. But I think here, once we met the Caldera team, it was pretty obvious that this was in our view the market dominant player and would continue to be the market dominant player due to the way they built the product in a way that was like largely unopinionated. A lot of the other players in the space have kind of like an overly prescriptive view of how the world should work, versus Caldera is just kind of building towards like what will developers actually want, what do they want today, what will they want in the future, and doesn't have like a particular horse in any other race, which I think is actually really important for this space. You have to be perceived as being sort of like objective and relatively indifferent. Like we have other companies in our portfolio that I've told them, hey, you should talk to Caldera because they'll have a more independent view of what stack you should use to launch an L2. Like I'm biased. I love Arbitrum because I invested in the seed round, but you should talk to the Caldera guys because they have probably the least biased view in the space.
So it sounds like you weren't fundraising when you got the nod here. So maybe talk us through that. Like you're working on things, you get a ping from the Founders Fund team. They're saying, hey, we want to dig in further. How did you decide to go deeper versus just saying, hey, we're heads down trying to build and we don't want to open up around now?
The thing that I really liked about our conversations with Founders Fund were they were always like very, very kind of tactical and strategic. And we learned a lot from speaking with them, which I think is very rare as a founder. And so for a while, it was quite casual. And I think a lot of credit to Founders Fund for like being patient with us, because that was our answer for quite some time, right? Like heads down, we weren't really interested in raising. We've always been a fairly disciplined company when it comes to like capital. So we weren't feeling any time pressure for this round. I think the thing that really excited us about Founders Fund when they kind of gave us the nod and said like, hey, like we'd be interested in going deeper. It's just like, it's clear that they had built a pretty high level of conviction, in both the space and the company and just like the dynamics of the market. And so we really felt like they understood our business, what we were trying to do. And there was just like a lot of trust there as well. Like I think, especially in this space, a lot of investors are quite, mercenary. And so we got the sense that like Founders Fund would have our back and they were very aligned with our existing plans and, any sort of future plans that we'd want to do. And so it was like a very, very easy decision once the conversations progressed to that point to, really kick things off and go with them for the lead.
What's one of the things that during the conversations you felt like you learned from them that helped inform some of your strategy or how you thought about the market?
Probably the clearest thing was, what Joey alluded to, which was like being very stack neutral or very aligned with other stacks. Especially at the time, it was not super clear that that was the absolute best strategy. It's something that we had, come into sort of because we had to, and because we thought that would be our competitive edge against the other players. But I don't think we had as, mature of a thought process around that as we probably do now. With Founders Fund, they've got a great overall view of the space, right? They've made investments at the DA layer, at other layers of kind of like the modular stack, especially at this point. And so just kind of understanding how all the other players in the space think through these decisions, how kind of alliances are formed, how people looking for L2s are thinking about, making decisions here. We could tell that like, some of these things were just kind of trust building because we could tell they had spent a lot of time in the market and we were very aligned on the ways we thought about things. Some of these decisions, like the neutrality decision, I think we actually did learn a lot, and it helped at least strengthen our conviction in the current plans. But just the totality of all those conversations gave us a ton of confidence that they knew, basically everything there is to know about the space.
Digging more into like the diligence process and kind of how y'all came to make a decision, would love to like understand a bit more about what that looks like at Founders Fund and maybe specifically in this deal. It sounds like maybe you got to know each other kind of like over a long period of time, but like, are you making customer references? Like, are you talking to other teams in the space? Like, are you guys like, digging into like the technical details? Would love to just like understand how decision-making and kind of diligence happened here.
Yeah, it varies across investment, but I'd say, a lot of our diligence is based on the team and the founders, right? And so a lot of the things we invest in, I'd say well over the majority of them are things where we met the founders and we sort of built a relationship with the founders over a period of time. Sometimes that's a number of months. Sometimes that's a number of years. There's the occasional investment where, the company's formally fundraising and we, do the process and go through all the diligence stuff and then make an investment. But I'd say the kind of experience with Caldera is more common than the latter. And in terms of what, how we approach diligence here, I think there's a few different layers to it. One is just like diligencing the team. So we like went to their office, met, the team. I think we did that multiple times actually, met them in person a good amount of times, and also just kind of got to see how they think by talking through, various kind of like strategic decisions they're trying to make with the business. Our approach towards it was like, we'll just try to be useful here and be sort of a sounding board like we would be with a company that we've already invested in. And, if we don't end up doing anything here, that's fine. And hopefully we helped you out a little bit and maybe there's some good karma there. And so during those conversations, I think you're able to learn a lot about how a team thinks, how a company works. You're also able to learn like how fast do they move, how fast do they do stuff. I remember, during kind of one of the meetings, they were working on like re-architecting part of the platform to make it a lot faster and also like make the code base a lot more robust. And then I remember another meeting relatively shortly thereafter, like they'd actually already done that, which is pretty fast and impressive. Doing a refactor of a code base or rewrite is really non-trivial. And if a company does that in a number of weeks, it's generally very impressive. It takes them a long time, many, many months, it's less impressive. So I think that's part of it too, is like, what's the speed at which they move? The other thing that's important for us is just like, do we think the founders will be able to, convince other people that they have the best product? It's not just do they have the best product, which we did diligence that and think that they do, but it's also like, will they be able to tell that story to potential hires, to potential customers, various things like that. And, over time, just sort of gradually build the conviction that they would be able to do that. In terms of like references and stuff, we tend to do more soft references through our networks as opposed to like, because obviously if you ask someone, give me some references, you're always going to get, the positive stuff, right? So we talked to people that we didn't know we were even looking at Caldera formally, right? Like we talked to Steven from Arbitrum and sort of just asked him, hey, there's a few of these, RAS providers we're looking at. What's your view of the market? And he's like, Caldera is the best team in the space in my view. And we kind of got that response pretty consistently from a lot of the people that we talked to, whether it was like, other pieces of infrastructure or other developers in the space that were using Caldera, things like that. I think the second piece of the diligence, the RAS like product, is sort of it's sort of like a really great lead gen thing. It's a really great spot to be, but it's not necessarily the thing that builds like a $50 billion business protocol or whatever 10 years from now. it's more of like the thing that gets you to the thing. And I think, a lot of the other teams didn't really have that kind of grander, vision. And I think we might get to that later in the podcast. But that was the other thing that was really important on the diligence side, is like getting that story, getting confidence that there's something, real there. And that was kind of the other half.
I definitely want to get to that grander vision, because I think it's one of the most interesting things to talk about. I think there's like one final question on this, and I'm curious, like, I feel like, when we spoke about the investment, it's like, this is a market that's competitive, right? There's a number of providers. Obviously, it sounds like you talked to a number of the other teams in this space. Maybe for like listeners who aren't as familiar with like the RAS space and all the options, would love to just like understand kind of like how you think about Caldera and where it sits in the market. And then, Joey, I'm curious kind of like how you generally think about competition as like a VC. Is it like, okay, competitive markets are fine, we think the best team can just like dominate, or, we want to invest in markets where we think there's natural monopolies? Yeah, curious on that as well.
The RAS space has become very, very competitive. I think as of last count, we have about 20 or so VC-backed competitors, of which I would say, on the order of 3 to 5, I would say are very credible. And we go head to head basically on every deal that we do. It's head to head with like one or multiple of those other competitors. I think generally like the way we think about competition has evolved. Initially it was extremely zero sum when the market was very small. And so we kind of did the pretty traditional thing of like doing things that don't scale. We did a fair amount of like custom work. We really listened to what our customers wanted. Going back to what Joey said about being fairly unopinionated. That's always kind of been part of our DNA. It's why we're very early to like Alt-DA, Celestia, L3s, the Arbitrum Orbit stack itself, right? Like we really trusted what our users were saying, and we trusted that they were asking for things for roughly, the correct reasons, and they had, good motivations for doing so. And so we've always been a fast mover when it comes to like adopting new technologies, et cetera. That's been kind of, our wedge in many cases against the competition. At this point, like as the market has grown, the space has become a lot more multipolar. There are kind of reasons why one might use us versus our competitors. We're trying to, of course, capture as much of the market as possible. The way we think about competition is like having or positioning ourselves, competitively against, the other players in the space. It's about having like a very, very strong foundation. So I think this is something that a lot of the folks in the space get wrong. They are going for all the bells and whistles, a million external integrations that they can't actually reasonably support. And that leads to like pretty big issues around reliability, just like the general quality of the infrastructure. And for us, like we take it very, very seriously that like when our quote unquote customers or partners, like this is probably the most impactful infrastructure decisions they will ever make in the history of their company, right? Like launching an L2 is kind of like their product. And so we take that super seriously. And I think a lot of our customers can tell that we do, relative to like, other folks in the space. I don't know exactly what their internal thinking is, but I think, a lot of teams have a revealed preference for not focusing on that as the main thing. We really focus on just keeping kind of our ear to the ground in terms of what people want. One example of this is Guardian nodes, just like the whole node sale concept in general, Guardian nodes, Keeper nodes, etc. But this is something that we're seeing a lot in the market in terms of, demand. And no one was really offering this as a service. And it was very, very complementary with our existing RAS product. And so, and as well, like fits into the kind of grander plan about building networks and building things on top of the Rollup product itself. And so doing things like that, making very kind of specific concentrated bets on products that we see initial demand for and we think, will become very big, has also been just like, a really great way for us to get customers. We sort of see it as like a land and expand strategy. We did this with Arbitrum. I think we're still at like 80 to 90% market dominance in terms of like new Arbitrum L2s that are launching. We're doing that with like the ZK Sync stack right now. We just launched our first ZK Sync testnet last week. And so like, just like generally doing things that people want, it sounds very, very obvious, but like doing the things that people want and doing it very well has allowed us to really beat the competition.
On my end, yeah, I definitely agree with everything you just said. And then, the reliability thing is really important, that your L2, not go down or not have problems, where that sort of thing is often underrated relative to features. Although there obviously are a lot of integrations and features that Caldera has too, but I think the reliability thing is really important. In terms of our view on competition, though, what I would say is, we really like to invest in market dominant players. If there's a market where it's like sort of a 2 to 3 player thing, that's fine. But we don't want to invest in a space where there's 30 companies and the market share is kind of all split across all 30, which there are spaces like that. And I think here, when we looked at Caldera, it was, sort of by far the market dominant player, whatever metric you kind of looked at. And then so the question is just sort of like, can they continue to be the market dominant player? And if you believe yes, which is largely dependent on the team, in my opinion, then I think it's a good bet. There's kind of the famous Peter Thiel line, competitions for losers, right? Which I think people can interpret a million different ways. But I think here, sort of the way I view it is, if you're the market dominant player, it's totally fine and probably good if you have competition, as long as you're still the dominant player. That's a great space to be in. And then I think with kind of a lot of the future products that Caldera will launch, there in many cases won't really be any real competition to it, which is even more interesting, because those might be, higher margin products or things where, there's less kind of competitive market forces that drive pricing down. So that's sort of how you look at like the upside case of it. But I think for the business today, just knowing that they're kind of the number one player is probably the thing that was most important to us.
Yeah, that makes a lot of sense. I mean, that's a perfect segue to talking about the master plan. I know you use some internal code names, but I would love to just hear, the grander vision for how you view Caldera beyond this kind of initial RAS product.
We started Caldera to scale Ethereum and to scale blockchain in general. And I think now with everything that's happened in the modular space, a lot of the protocol development that's occurred at the L1 layer, right? Like 4844, blobs, DA, maybe eventually base rollups or whatever. Ethereum is now horizontally scalable. People don't internalize that as much as they should, but this is now effectively a solved problem, right? And we're part of the solution. Everyone else downstream of us is part of the solution. You press a button, you get a roll up. It has effectively dedicated block space. And if you squint, that's for all intents and purposes, practically infinite. At least it'll be able to, support basically all of the applications that will be built on blockchain from now and to the far future. If that's a solved problem, it kind of creates this other problem, which is, fragmentation. And so what we're seeing now in the Ethereum space is we have 50 rollups launched, right? There's maybe on the order of 100 plus in general. In many cases, they have similar architectures that, sometimes the same architecture, right? Same VM generally, but it's still very, very hard to interact with them. And when you're developing an application, it's really, really difficult to do that in a chain agnostic way or chain unaware way, or in a way that just provides strong abstractions for users. And so I'm, maybe kind of bearing the lead here a little bit, but what we're focused on, that is the big problem that we're focused on. So to some extent, right, it falls into this general trend of chain abstraction, but we want to make it really, really easy for people to build applications that work across all of the chains we run and hopefully eventually across all of the rollups in Ethereum. And also we want to make it easy for developers to do that as well. We think that's actually a really key piece where we speak with developers all across the stack, in many cases, app developers, but also infrastructure providers, basically building any sort of on-chain infrastructure, we speak with them. Right now, even if they have a multi-chain strategy, that's just setting up separate servers and separate deployments for every single chain, right? And same thing with applications. If you're a cross-chain application, in many cases, they're just separate instances all across different applications. What we really want to help the space move towards is this kind of true app chain vision where you have a game on one chain, where there are game assets being built. Then you have a DEX on another chain and people can take those game assets, trade them on the DEX in a way that feels native. And so for us, we think we're in a really strategic position to build protocols around that theme, because we're at the sequencer level. We can actually make stronger guarantees about what transactions get included, how interoperability works, et cetera. And we also think we have a really kind of credible position for building something that can work across all rollups in the Ethereum space. We are one of maybe 3 teams that have experience working with the top 4 rollup stacks. That's not even true of an Optimism or an Arbitrum team, necessarily. And so we kind of want to build something that is able to unite all of those different rollups and enable interoperability and also cross rollup development across all of those. It's still very early in terms of the development of that product. We're doing a lot of need finding. We want to build something that is actually built to last and really very, very useful to our users. But that's the general theme of things that we're, the path that we're kind of going down.
Yeah. I think it's the natural pain point for anyone who uses Ethereum on a daily basis, right? It's you have your assets on Base, you have your assets on Optimism, and the bridging process, even just the UX in terms of like aggregating those assets. As you said, like Ethereum is kind of a bunch of islands right now, and they're sort of connected by like a slow ferry.
Yeah.
So maybe you're the like little plane service that's going to come in and connect all these islands.
Yeah, I like that analogy. I guess one other piece that I think is very important is like, and this is something that RAS really uniquely enables, is that when people talk about chain abstraction, there's a lot of kind of hand waving around, what the security model is like. Not only do different stacks have different kind of finality periods, but you actually have a pretty strong reliance on the underlying infra provider to provide like soft guarantees, right? Like, we've seen now massive like 1 day long reorgs, right? And rollbacks on some optimistic rollups. And like, those generally don't happen. And most interop protocols assume that they won't happen, but that's like a certain amount of trust, not on the underlying protocol itself, but on like liveness of the underlying infrastructure provider. And so the kind of important thing there is like, we're able to connect all of the chains in our network, and we're able to potentially provide stronger kind of guarantees of the reliability of that infrastructure, because ultimately like there's one company that's in charge of like the liveness for all of these chains. And so that puts us in a really great position to like build relatively trust minimized interop protocols across all of those chains, and provide, stronger guarantees to users that like when you bridge from A to B, you'll actually go from A to B. And your transaction won't get rolled back in like 12 hours or something. So.
One of the things I'd like to talk about is the broader landscape of app specific rollups and then also generalizable rollups. So you mentioned Manta at the beginning of the podcast as one of your flagship customers, but I think when we look at our portfolio at Lattice, a lot of teams are more app specific and they want to roll their own L2. In your pipeline, the CRM that you guys are like, what does the future look like for the landscape of rollups? Who do you think is going to be launching them? What sectors do you think will kind of take the lead in growth there? So it could be gaming, DePIN, DeFi. What are you most optimistic about in the short term?
So this is something where, we're pretty opinionated about how things would trend, and we actually ended up being correct on this prediction. But like post, Ethereum transitioning to a rollup centric roadmap, there was kind of like a power vacuum that got created. ETH core devs are saying, go build your application on some L2. There are many options for L2s, but there was a lot of room in the market for people to create new ones, right? Either that have like really strong community or BD in specific regions or specific ecosystems. I would consider Manta in that camp, right? Like Base is another one, obviously. Teams that just like have very strong distribution, that sort of thing. So that was the game on the field for a long time. And it still kind of is, people creating general purpose or like semi-general purpose chains with the expectation that other people will deploy apps onto those chains. So we saw a huge explosion of that. That's still happening. They're like gaming specific chains. We're working with like Ape Chain, for example, to launch that. Like that'll be fairly general purpose. We have chains that are very like RWA, KYC, DeFi focused that are also somewhat general purpose. And so that's still happening, but we are seeing now it's probably gotten to be roughly 50-50 in terms of general purpose to app specific. We're seeing a lot more gaming teams looking to launch a chain. As you mentioned, like DePIN or like sort of like DePIN-esque things, right? Like decentralized streaming, decentralized social, and then like more kind of true DePIN projects. And like we kind of expect that trend to continue, right? Like the kind of alpha in launching a general purpose chain on Ethereum, I don't think it's going to like last forever. Really, like we think that, as the market matures, there will be more and more value accrued at the application layer. And so we're expecting there to be a lot more activity on the app layer. And it's the exact categories you mentioned. Gaming is really, really big. And we're speaking with basically all of the major, crypto gaming companies, and they're all very interested in at least exploring launching their own chain.
And Joey, I mean, you've been investing in crypto for a long time. And I know previously at Pantera, you guys invested every up and down the stack, but in a lot of applications. So, what are you optimistic about on the app layer that eventually can roll their own infrastructure?
One of the applications that I'm most excited about right now is Polymarket, the prediction market platform. We also invested in that at Founders Fund, and there's obviously opportunities for them to, roll something. I think right now is probably like, not a good time because the election and stuff, but you can envision in the future maybe something like that. That's the only one I can talk about. The other investment I have in mind is not public yet, but I think there will be a lot of cool consumer stuff coming, later this year.
Maybe just as a parting question for both of you, for any teams that are looking to raise from Founders Fund, what should they be thinking about, Matt? And then Joey, for you, what are you guys looking for? What are you most, what sectors, what areas do you want to see builders and founders going towards?
The thing that I most appreciated about Founders Fund is that it felt they were really evaluating us as a team and a business. And so the things that helped us, I think, raise from them were just generally things that I think helped the business. And I think that's always a good sign when working with an investor that, you feel like there are ways of evaluating you are very aligned with your own priorities as a business. And so we have never been a company that like optimizes purely for like, the raise, who we can raise from, who pivots into like new narrative just for the sake of it. And so I really appreciated that it felt like Founders Fund was just evaluating us like fundamentally as a business and, as a team and looking at the market opportunity. So I don't have any tips beyond just like try to be good, good business.
On my end, I would say, so we're always looking for like really big 0 to 1 things that can become quite massive. Sometimes the 0 to 1 thing is a technical thing. Sometimes it's like a distribution edge. There's a lot of ways you can be, very different. The team is really important to us. In terms of the way we invest, we're not super thesis driven in the sense that we obviously do have opinions on the space. Sort of how we found Caldera was due to some opinions on the space. Like this is a problem that should be solved. But a lot of it is just like, do we resonate with the founders and their vision? And does their vision make sense? Does the way they pitch it make sense? Are they going to be able to burst through brick walls to actually build what they're trying to build? The view of way we do things in crypto is we very consciously didn't launch a separate crypto fund. We do everything out of our main Founders Fund, Fund 8, or if it's later stage in our growth fund. And I think that was really important to us because it requires us to keep a very high bar for what we are willing to do in crypto, which then I think makes it a lot easier to help portfolio companies out, whether it's like helping them out on kind of like the fact that we're vouching for them as being like, we think this is the best company in this space and we don't back any competitors, helping with hires, BD partnerships, things like that. I'd say sectors we're excited about. Obviously, infrastructure stuff has always been, kind of something that I've done in crypto. I think also, some of the consumer stuff, we've made 2 consumer investments over the last year. In the decade prior, maybe I made 2 consumer investments, something like that. So I'd say the consumer space in crypto is finally starting to take off. There's not like a million companies yet, but I think there are a few that have really taken off and gotten a meaningful amount of traction on things like Polymarket. And definitely would look to do more on the consumer side if we find great teams as well. So, for us, it's all about the team, is what I'd say.
Awesome. Well, we really appreciate you taking some time out of your busy schedule here in Brussels. It was awesome to talk to you both and learn more about the round. Maybe just a final thing, where should people keep in touch with you? Twitter, website, email, Telegram? What's the best way?
Yeah, for us, both personally and as a company, X is probably the best place. So company Caldera, XYZ, all one word. And then for me, I'm at 0x Katz, KATZ on Twitter.
For me, I'm just at Joey Krug on both Telegram and X. And then email, you can just email me, joey@foundersfund.com.
Very generous giving out the email.
Guys, thanks again for taking the time. This was an awesome chat.
Thank you so much.
Thanks guys.